Good morning. You're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our top story. Bad loans rose for the second straight month in February, bringing the non-performing loan ratio to its highest since 2009. This as borrowers had difficulty making payments amid the COVID pandemic. Gross NPLs held by banks surged 80% to a little over 431 billion pesos in February. That's from an almost 240 billion peso figure a year earlier. The February NPL is also 9% higher month on month. That brought the NPL ratio to 4.08% in February. That's the highest reading since the 4.09% print reported in October of 2009. S&P Global Ratings expects bad loans to peak by the second half of the year, but it noted that any improvements in the borrowers' capacity to pay remain clouded by the pace of economic recovery. That means it is highly dependent on the successful handling of the pandemic and the government's mass vaccination drive. As NPLs increased in February, banks beefed up loan loss reserves by 70% year on year, while banks' NPL coverage ratio dropped to over 86%. That's from 91% in February of last year. Still, despite these NPL figures coming in, Moody's did raise the credit outlook of Philippine banks, albeit, of course, flagging quite some risks here. So they had downgraded their outlook for the banks in April of 2020, just as the pandemic started to hit here in the country. That was from stable to negative, and now it's basically been put back, raised back to stable. This on the back of expectations that there will be a mild recovery, which will be supported the operating environment. But of course, as we had already mentioned, what risks remain? They did mention that the NPLs will be increasing, especially after the loan moratorium ended already last year. And they did mention there's still lockdown measures going on, high unemployment, and a weak consumer sentiment. That is going to weigh on the ability of retail borrowers, especially SMEs, to repay the debt. Another thing they have been flagging, large corporate groups, their debt repayment capacity deteriorated materially in 2020, and that remains a key source of systemic risk, especially because the banks are heavily concentrated on them. But they did mention that the capital buffers and profitability will be stable, particularly because the banks had already set aside those specific loan loss provisions already in 2020. Checking in, however, on our year-to-date financials, that has been down by 5 0.6%. PNB, the hardest hit, so to speak, in 2021, down by 22%. Let's see how it's opening and trading in the first few minutes of trade. PNB actually the best performer, at least for today, up by 0.9%, followed by BPI. Now let's take a step back and check in on our local index. Unfortunately, not making the cut towards 6,500 levels here. We're still at 6,474.51, but that's still slightly up this morning compared to our close. It's up by 3 0.6%. Recall that yesterday our stocks fell the most in Asia. That was a third straight day of decline, with mall operators like SM Prime and Ayala Land the worst hit yesterday. Let's take a look at which ones are now actually performing this morning and bringing that up. It does seem to be a reversal of fortunes. SM Prime now the best performer at the open, up by 1 3/10%. Ayala Land, however, still in the red. Emperador, interestingly, the worst performer this morning, down by 4/10%. Interestingly, this may have something to do with the fact that they have approved a new buyback program of up to 1 billion pesos. So the board has approved 1 billion pesos to boost shareholder value from April 12 and will end on December 31. They will be repurchasing the shares using cash and booking them as treasury shares. Emperador now trading at 10 pesos and 44 centavos. And finally, just one little piece of news on Ayala Land. Logistics in particular, now venturing into cold storage, another cold storage facility there being bought out. This is Techno Freeze. That is for 409 million pesos. This is a facility in Laguna, Techno Park Services, that processes meat, dairy, ice cream, and adhesives. They have also bought 11,800 square meters of that land in which the facility sits. Here are the other headlines we're keeping our eyes on. President Duterte has certified as urgent 3 bills aimed at easing foreign investment restrictions in the country. These are the Public Service Act, the Foreign Investments Act, and the Retail Trade Liberalization Act. In his letter addressed to Senate President Tito Soto, Duterte said these 3 measures are needed to introduce reforms that will provide a more conducive investment climate, more job opportunities, foster more competition to further support economic growth. However, the proposed third stimulus law, or the Bayanihan 3, was excluded from this urgent certification. Instead, Palace spokesman Harry Roque says Malacanang will be waiting for the economic managers to find out sources of stimulus funds to keep the budget deficit cap intact. Now, despite certifying 3 new bills as urgent, there is still no word if a special session will be called. That's as Congress remains in recess until May 17th. Now, this from the Philippine Star: a clash between the executive and legislative departments is looming. That's as some lawmakers vowed to repeal the president's executive order on the pork tariffs. Senate Minority Leader Franklin Drilon, together with Senators Cynthia Villar and Kiko Pangilinan, are all set to file a resolution to revoke EO 128 that lowered levies on the imported meat. The Makabayan bloc in the lower chamber also plans to do the same. But as it stands, there is a slim chance that the push to override Duterte's EO would succeed since the Congress is currently on break. For its part, Malacanang says it respects the call of some lawmakers to revoke the executive order. However, the executive branch emphasized the need for cooperation to protect the interests of stakeholders, including both consumers and the hog raisers. To comment on this pork tariffs issue, we have with us this morning Asec Noel Reyes, of course, of the Department of Agriculture. Good morning, Asec, and welcome to the broadcast.
Yes, good morning, Danny, and good morning to our viewers for Businessworld Live today, Wednesday.
Asec, good morning again. And where do you stand on this contentious matter? Should we be lowering tariffs on pork imports right now to assist, of course, consumers in being able to afford this? That has been the cause of the supply side inflation. Or will this be hurtful to the hog industry that has already been battered with all of these ASF outbreaks?
We came up with the recommendation all because of the increasing supply of decreasing supply of pork in the global market. As you can see, there's also a thinning uh, hog production in the world due to the ASF problem worldwide, specifically in China, no, as the biggest consumer. And here in the Philippines, we're anticipating that the prices, no, as of now, hovering about $3 per kilo, would increase. So therefore, we recommended lower tariff all because of that. So again, to bring in cheaper imports of pork, and that will stabilize the prices here, but not necessarily competing with our uh, local pork price.
Sir, can you nuance that? Why would it not compete with the local hog producers, especially if you're making imported goods now cheaper? And they, of course, need to make bawi because nga nawawalan sila ng supply.
Kasi basically, what we're doing is to come up with a 3 million deficit. Okay, the local producers cannot deliver that volume right now. So as you can see, based on estimates of the Philippines Statistics Authority, our population went down by almost 3 million, and now, as of January 2021, it was down to 9.7 million. Okay, and that was from a high of 12.7 million uh, in 2020. So again, with the ASF problem, we cannot produce as much as we want to deliver or correspond to the demand in Metro Manila and other urban cities. So again, we're augmenting this deficit in supply through imports.
Sir, this is not necessarily the sentiment of Senator Ping Lacson. You can see his tweet being flashed now. Can you comment on that? He actually said that according to PSA data, there was a surplus of the local production of 400 million per year. Can you please reconcile these two figures?
So what we're referring is to the exact figures, okay, from the TSA. We have a supply in volume in carcass weight of 1.2 million as of January, a beginning stock of 33,000, and a production of only 1.2 million. That brings up to a deficit of 388,000. So that's why we recommended a 400,000 increase in carcass weight. This is equivalent to about 6.9 million hogs for the entire year. Okay, so that's what we're coming from. We recommended 400,000 metric tons of pork, which is equivalent to about 6.9 million in live hogs. That cannot be delivered by our local hog producers because starting now, we only have 9.7 million hogs that will, say, produce piglets, and not all of them, no, 9.7 million are all breeders. So again,
Okay.
we need additional 6.9 million hogs that will be slaughtered throughout the year, which is equivalent to 400,000 metric tons of pork. So that's what we're coming from. That's where we're coming from.
Sir, has the supply side issue from a domestic perspective and just from an ASF containment perspective been addressed already? Can you say that we will no longer be having outbreaks in the future that is going to threaten our current shortage already?
We're doing that, Danny. We cannot say categorically that we're controlling ASF. Incidence of ASF is waning, it's decreasing, but then again, there's still the threat of ASF. So we'll have to uh, contain it in those ASF areas in Luzon, basically in Luzon, some parts of Visayas, and some parts of Mindanao. But then again, we're saying that ASF incidence is waning. So that's why we are vigorously pursuing our Bantay ASF's barangay in partnership with LGUs, the private sector, and the hog raisers themselves. So again, we have to do this, and the industry itself, no, they have uh, they have estimated that given this drive, the industry will recover in 2 to 3 years' time for our estimate. And then the private sector, they're estimating about a longer time, about 5 years. No? So again, we'd like to increase our population again to 3 or 4 million in the next 2 3 years.
Sir, let's talk about the consumer side here. You've already taken out the price caps for the pork. Are you still, to what extent was the inflation figure, which was still above target but nevertheless lower than what was expected, related to these price caps of pork? And now that you've taken that out, how threatening could it be for the increases in prices?
No, we recommended an SRP for imported pork and no more for local pork. Okay, so that ranges from 270 for Kasim, and then 350 for Liempo, based on the going rate of global prices about $3. Okay, and the landed cost. So we computed that plus the uh, say markup, reasonable markup from traders, from the importers, and then retailers. So we came up with the 270 to 350 range. We believe that price is about reasonable for all, and that local pork prices will just have to follow those range.
Sir, what's the range right now in your monitoring?
It ranges from about 340 to a high of 390.
Okay, but you're
320. But
anticipating that it will
again,
be lower.
yes, as soon as imports come in, we expect imports to come in 30 to 45 days.
Okay, and sir, final question po on that importation issue. The tariffs will be lowered, and Senator Lacson is saying we will be losing 3.6 billion pesos in revenue if that does happen. Can you comment on this, and where are we going to get back that revenue?
Yes, we agree that we will lose some, but not that much, not that magnitude. Okay, because not all imports are the price, say price cuts or something, premium cuts. So again, we anticipate, of course, lower tariff corrections about from 30 to about 5%, so about 25% uh, loss in tariff. But again, what we're saying is this will be translated into lower prices of pork for the consumers.
Okay, so nevertheless, according to you, a necessary step that we need to do to address the shortage supply for the temporary time being. Thank you so much
For
for
one
those
year.
insights
Yeah,
for
for
1 year.
only 1 year, Danny.
For only 1 year. Thank you so much for those clarifications. That was, of course, Asec Noel Reyes of the Department of Agriculture.
Thank you, Danny.
And that's a first look into the business day. Today is Wednesday, April 14, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, and stay safe, Philippines. We are One News.